Good evening, everybody. Good morning, good evening, good night, good whatever it is or wherever you are in this world. Welcome to our first Saturday Skills, but like usual, we humans tend to procrastinate. So, this is our first ever video recorded, and this is what I'm going to be doing in the clubhouse, whereby I'll try my best to simplify topics that you guys feel you require in order to progress in the world of trading. So this is one I just drew just now. I hope you guys like the art to it. So this is why I say when I need to find my energy, because to draw this little fucking shit takes time as well. But nevertheless, for today we'll be talking about supply and demand, support and resistance, a very basic but very powerful topic that would get you going into understanding the market as a whole. So, firstly, we are going to be talking about support and resistance. As a trader or upcoming traders for you guys, this is the most important topic you can ever focus on, because through support and resistance is where all the techniques are born. You want to talk about EMA, you want to talk about FIBO, you want to talk about MACD, you want to talk about engulfing. All this is a branch of support and resistance. So therefore, it is important for you to be focusing on this particular topic, because I feel like when you understand this well, you can be moving very quick in the world of Forex. So, support and resistance, to put it very quick and simple, support is a place whereby when price is falling down and it hits this particular zone, it is somewhat like a trampoline that bounces the price back up. So this is what we call as a support. And in a support zone, you will see that there will be a huge amount of buyers. In most cases, support zone could be a potential buy zone. Remember when I used the word potential? Because just because you manage to locate a support zone doesn't mean you can buy. But you have a zone to monitor. This is when we will in the future learn how do we find our technical setup that is confluent with the idea of buying. So same goes for a resistance zone. As price is moving up, when you want to look for a sell because you are targeting the price could reverse, this is what a resistance zone is all about. So in this resistance zone, you will tend to see, in most cases, sellers would be living in here. Therefore, if you manage to locate a resistance zone, your action plan is to potentially look for a sell. Whereas for a support zone, your action plan would potentially be looking for a buy. But we're not going to be talking about entries. Now it's more towards how do you mark and how do you locate and identify a particular zone. So this is where we will go into the branch of how do we locate supply and demand zones, and later on, how do we find the support and resistance zone in the demand zone for you to get your entry. So, a very quick misconception: supply and demand zone does not mean it is a support and resistance zone. I repeat that again. Supply and demand zone is not a support and resistance zone, but instead it is a high volume zone, meaning when price starts to float around that area, you will get a lot of attention from other traders around the world to be participating in this particular zone. So therefore, you will see in that region, it can either burst up or burst down, but at a very strong volume. So far so clear? Perfect. Therefore, we first have to always be able to locate the nearest supply and demand zone, because this is where we want to be trading. This is where you can potentially get 100 pips. Either buy or sell is a different situation, because that would need a setup, a technical setup. Like I said, I have my M1 reversal signature pattern. So that is a setup. But before even looking for a setup, you need to know what to look for. Where do you press in the chart? So for those of you that always follow my live trades, you guys always see I will draw boxes and zones filtered down, and I said this is high risk sell, this is medium, this is low risk. So if price starts to go up to the low risk, potentially we could sell. All this is about supply and demand. Okay, so for what I have been using my whole life, which is why I'm going to be sharing with you the things I do these days. So I use the concept of engulfing. Engulfing is a methodology for you to be looking at a potential reversal zone, either a potential reversal to look for a buy or a potential reversal to look for a sell. So from here, we will be creating a zone called engulfing buy or engulfing sell. So an engulfing buy zone is a zone whereby potentially buyers exist. I'm not saying you can buy, but potentially there will be buyers in this zone. So this zone can become a demand zone. Another thing for engulfing sell, on the other hand, engulfing sell, as the name indicates, is a potential zone for sellers to exist. So from here, we have filtered down one step closer in either looking to look for a buy or a sell. So what are the key criterias for you to know about engulfings? Therefore, I want you to remember this structure. For example, this is the most basic structure. Engulfing buy is a scenario whereby, firstly, we have to be looking for a bullish candle, or you can call it a buyer's candle, or you can call it just the green candle, eating a red candle on the left side. It is confluent with its word, engulfing, devour. So therefore, we need the green candle to devour the red candle. And then we can say it has succeeded to create an engulfing buy zone. So when we see a green candle eats a red candle, here are the points. The lowest and the highest. We always take the lowest and the highest. So when the candle is successfully have eaten the red candle, this zone is what we call as, I will just use a short form, engulfing buy zone. What does it indicate? Potential buyers in the future. And then for the engulfing sell is when a red candle, or you can call it a seller's candle, or you can call it an engulfing sell, is when the red candle devours the green candle. How does a red candle devour? So meaning it has to show that the sellers are stronger than the buyers. So what we must be looking for is a scenario whereby the left candle is eaten by the red candle, and then we can take that zone from the highest point till the lowest point of the green candle. This is the engulfing EG sell zone. So from here, Remember my words, yeah? Potential sellers in the future. So, to put it into simpler terms, how do we find support and resistance? We will be using the methodology of an engulfing. So engulfing is split up into two. Bullish engulfing or engulfing buy, whatever you want to call it, whatever fits your tongue well, will allow us to potentially create a support zone. Where else for engulfing sell, or you can call it bearish engulfing, or you can call it EG sell, will then indicate a potential resistance zone. Because in the end of the day in Forex, you want to look where do you want to press buy and where do you want to press sell. So in an engulfing buy zone is potentially a place whereby you want to be pressing for buy, and the total opposite for engulfing sell. So there are a few key points that you need to know about engulfing buy. First step is the right candle, which is for this reference, which is the green candle, has to eat the left candle, which is the red candle, this candle. So when we, remember what I said, when we talk about eating, the body of the candle has to be higher than the highest point of the red candle. Because we want to know that the buyers that push the price from here till here is strong enough to overpower the sellers that lives in this seller's candle. So that's why I put an important note over here. The top part of the red candle, the top part of the red candle has to be overpowered by the body of the green candle. It's very simple, but such a powerful technique that I have used. It's just that I have created a structural pattern using engulfing. But this is the basics first. So these are a few references to the types of engulfing buy, because you will see that in the charts a lot of shapes could show itself. So this is the most basic pattern. The green candle eats the red candle, and then there is another case whereby sometimes the green candle eats the red candle, but not in one blast like that, but instead it took 3 candles. As long as it's consecutive, meaning there's no intermediate in the middle for a red candle to exist, it's green, 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 you can just do this in your head. Literally just visualize it as one long candle. Get that? And then for example like this, the green candle on the right overpowered the left candle's highest point. So how do we mark the zone? From the highest part of the red candle until the lowest part of the red candle. This zone is then the engulfing buy zone. And for example like this green candle overpowered this red candle. So we take the highest part of the red candle down to the lowest part of the red candle. Same goes for engulfing sell, just in the total opposite direction. The right candle have to eat the left candle, which is the green candle. Okay? Important part is the bottom part of the green candle needs to be overpowered by the red candle. Meaning, if it's a seller's engulfing or engulfing sell, the body of the red candle have to overpower the lowest point. So then we just take the lowest point of this candle till the highest point of this candle, and mark that zone. So this is a potential, no, this is an engulfing sell zone, but potentially we could look for sell. Why do I use the word potentially? Because you guys do not know my setup. Meaning, what do I look in here in the future to indicate that it will drop? I have just managed to get a zone from this engulfing sell. But I will have to filter down in the lower time frame to get the confirmation that a sell can happen. Because if not, let's say this candle drops, yeah, and then it goes like this, sideways, and then comes back up. Some people might just say, oh, it's an engulfing sell zone, I want to sell. You know, there are times you get lucky, it drops. But there are another scenario whereby as price comes here to the resistance zone and then it just breaks out. So this is when you need to know how to use different multi-time frames. But if you use a bigger time frame, let's say daily engulfing sell, weekly engulfing sell zone, H4, sometimes if you just press sell, you are lucky enough, it will drop. But of course, gradually we will learn to grow better in this. So that was the theoretical side of things. So now I need to be going into the charts to show you guys a potential. To show you an example from the chart itself. So I'm going to be marking, let's say, 3 engulfing buys and 3 engulfing sell. So let's start with an engulfing sell zone. So let's say this part. The left candle is overpowered by the white candle. So I mark that whole zone as an engulfing sell zone. And I will find another engulfing sell. For example, I will be looking at, why do I go for? Just to give you guys different references. Let's say this. This white candle ate this blue candle. So therefore, this is the engulfing sell zone from the highest point of the blue candle until the lowest point of the blue candle. So then I just mark the zone and see what happens in the future. As it comes here, goes back up, and then drops. And then it comes back again, it drops. Woo! For example, that is an engulfing sell scenario. So this is as well an engulfing sell. 1 candle, 2 candle was what it needed to overpower this blue candle. So this is an engulfing sell zone as well. So that's why you have 1 engulfing sell zone, the second engulfing sell zone, and then the third sell zone came and dropped. If I were to change this into a line chart, this is what you will see in the textbook triple top. One top, 2 top, 3 top. If you just take the first 2, a double top. Things like that, you know. So this is from engulfing. So that was a quick reference of an engulfing sell. So let's say I want to show you an engulfing buy. So here, the blue candle overpowered the white candle. It didn't do it in one shot. It took 3 candles. 1, 2, 3. So the moment this particular candle was the candle that confirmed this engulfing buy zone. So now I just have to label this zone and see what happens in the future. So this is when we want to be talking in the future about engulfing buy that breaks, which then will be converted into an engulfing fail. But I don't want to be teaching you that stuff first. I'll be teaching you the basics first. So this is an example of engulfing buy. So let's say for this guy over here, this guy created an engulfing buy zone in just one candle, meaning one blue candle overpowered. So look what happens when it flew up and then it came back down. Drops in here, flies back out. Drops in here, flies back up. Drops in here, flies back up. Drops in here, flies, spikes back up. So that is an engulfing buy. I'll give you more examples of engulfing buy. So let's say this is an engulfing buy. Blue candle eats the red candle. Mark the zone. Later on, you will know how to identify good quality engulfing buys versus bad quality engulfing buys. But that's not the topic for today. The topic for today is how to mark your zones. So this is an engulfing buy. So potentially in the future, if price comes back near here, we need to be monitoring potentially it could buy. So I want to see in the future what happens here. So wait, I'll get you some better references because that day that zone was insane. So that was more of a random event, I would say. Okay. So let's say like this. Oops. This is an engulfing buy. If I were to ask you how many candles did it take to create this engulfing buy? 1, 2, 3. The third candle broke the high. So this zone is now an engulfing buy zone. So in the future, I need to observe and monitor if there is another confirmation for a potential buy. So when price came back in, it flew back out, leaving another engulfing buy. So now, if you know how to filter the setup, you can look for the buy setup in here and price spikes back up. But this is the introduction to engulfing buy. So what I want you guys to be doing is for tomorrow, let's say you take out Euro USD. Just use daily first. Do not even have to go anywhere else. Let's say daily. Mark the nearest engulfing buy and sell zone from the current price. So what is nearest? Let's say you take 60 pips. Somewhere around. Okay, how to calculate pips? Very simple. You just take any kind of line, trend line or this arrow line, and then you see up there the middle one. 616, let's say 6189. That you have to divide it by 10. So you will get actually 620 pips, meaning from here till here is 620 plus pip. So let's say if I were to pull it from here, look at the numbers up there, it's written 417. So this is 41 pips because it's a daily setup, right? So for Euro USD, what I want to be doing is I want to mark the nearest engulfing buy. So it's here. One is here. One is here. So maybe this will be broken based on the momentum. Then it will go to here. So from here, maybe we can look for a buy. Let's say you want to be looking for a sell. So find the nearest engulfing sell zone. So there is one zone up here. Engulfing sell. So you can use different colors. Let's say engulfing buy zones, you put it as green. Engulfing sell zones, you put it as red. So in the future, if price comes back up here, potentially we can look for a sell. I'm not saying you go press sell. That's stupid. But now, if let's say I give a signal here and I give a sell, then you know why. Oh, okay, there is an engulfing sell zone. Probably wicks managed to filter out in the lower time frame. So this is your first task, to monitor daily and H4, meaning mark in different colors your H4 engulfing buy and sell zones. Okay guys, so that is the introduction to locating support and resistance through the understanding of using engulfing buy or sell, which actually allows us to create a supply and demand zone. So from this supply and demand zone, which is not a support and resistance zone, yeah, it is just a high volume zone. So in this high volume zone, potentially we could look for a lower time frame support or resistance, and then we can look for the same direction. If we have arrived into a engulfing buy zone, let's say here, down here, if we see an engulfing setup to buy, then we can look for a buy. So for your task, go to H4, mark the nearest engulfing cells. So let's say for Euro USD, it's here. 1. So look as how price came back up here. It started rejecting. So let's say, remember our AUD USD sell. Oh man, my chart's not loading. It's not loading. But no, it's not loading. Damn. But never mind. You guys just go practice that. So let's say now this is a GBP USD. Down here is the nearest engulfing buy zone. You just have to mark first. Why is it important to mark? Rather than, for example, you clicking randomly in this black region, at least you should be clicking buy or sell in a supply and demand zone that you have found from engulfing on the bigger time frame, H4, daily, weekly. So let's say next zone. Where is the next zone after this zone? If you want to look for a buy, it's over here, down here. So get it? So that's the quick tips and learning with me on a Saturday, Sunday night. Thank you guys.